Okay, there we are. It is Sunday. The sun is finally shining, even though I think it won't take long before it's gonna rain again in the Netherlands because it's absolutely rubbish. But how are you doing? I hope the weather is better in whatever country you're living. There probably are there are some Dutchies here as well. So, I mean, Gouda wasn't the best this morning, let me tell you. Okay. So, how you doing, chat? What's up? Woti, welcome. Card Crypto, Kiko Pauba, Chilfu, Raymond, also here, of course. Well, we got one Dutchie, that is Flotti from Austria. Nice to hear your assessment again. Yeah, we go live once more. Like the weekends, you know, it's a bit more flexible, at least if I don't have anything to do with friends and family. And today it's a day where I work on my other business, mainly. It is also the day where my fiance and I are engaged for exactly 1 year. So we went for dinner last night and we're going to do some stuff later this afternoon as well. And it is a day where I have the opportunity to go live for a little bit. So I'm planning to go, probably be live for about an hour or something before I really have to get back into doing some other stuff again regarding my other business, making a planning till the end of Q4. So that takes time, but chillful, raining all day. Kiko Pauba, Brazil. The sun must be shining there. Bogdan, welcome. There he is, newest Diamond member. Good to see you around, man. You've been around for a long time as well. I think even before the Discord group was a reality, you were here already. And of course, one of the first 100 people to enter the Discord group. Vasil Miron, welcome. Good to have you around as well. So what we are going to do today is, of course, we go through the chart. We'll have a little look at the current range. And we'll also be zooming out, right? We go from top down and see what we're at. This current range is of course, quite complex to count, but what is interesting is time at the moment, because we have almost reached the one-to-one of the bigger potential wave 2 in a bullish environment, in a double 1-2, and the smaller wave 2. So, yeah, doesn't look good for the bulls. The probabilities, as explained in the morning, remain the same, meaning that the probabilities are currently higher to still take the double bottom at some point. And we got to wait and see how price then eventually wants to do that, right? Like what's the route going to be? Because it's a difficult to count range in detail. The best thing to do quite often is to then wait for impulses, because impulses are quite easy to to spot, easy, quote unquote, right? And the moment you see an impulse, it can only be a wave A, C, or 1, and that's the question, right? And in some of my update videos in the past, whenever we're in a range and then we see an impulse, then I go over, hey, is this a wave A, C, or a wave 1? But at the moment, there's no sign of a clear impulse per se. This over here, very much a 3-wave structure on the lower time frame, like an ABC type of move. 3-wavy, you know, could this be a 5-wave? Well, potentially you have an ABC, so then it's a 3, 3, maybe another 3, and you continue. And at a bigger WXY, moving to the downside towards that daily level. In the morning update, of course, a level of interest, because besides the daily over here, we also have the point of control of this range over here. So that is something. And did we have something else here? I forgot. I think not. Point of control, value area low, daily. Might act as a little bit of support if we get down there. Let's put this on extend to right. Poof, and there we go. Okay. So yeah, it's an interesting range. Watching Koenz from the beach, 27 degrees here in Spain. He's making myself and Chad jealous. One day, we're planning to move to the south of France. Who knows? Okay, let's zoom out. Start zoomed out, and I'm gonna put my alarm at the lows here. So we have an alarm. What's this? This is another alarm. That one is irrelevant. I want alarm at the point of control. So these are my levels of interest, basically. The area around the daily and the point of control, which is just below, and the naked point of control over here, which is the point of control of the news event thing. So news came in, pump up, and eventually a pump down just as quick. But the point of control of this area is very interesting. So that is why I have it over here, as many people bought the top. And the moment price comes back, they're selling, right? They're probably, those are longs, being baited. And yeah, they are now underwater. So if they have the opportunity to get out break even, they will. So it's always an interesting area, these point of controls. While price, this is what I like to see. We start the stream and we get some volatility. Let's see where that goes. So anyway, got an alarm over here, just below the lows, got an alarm at the point of control, and we'll see what price does, right? Let's zoom out. Holy moly. So on the higher time frame, let's actually more like jump into this area. Honestly, this is of course the most interesting area. I can't deny that the double bottom here remains interesting, even without any Elliott waves. Double bottom, very interesting. The wick of Bybit, very interesting. Actually, for the first time in a video, I think yesterday, I explained why the wick on Bybit is so important for the probabilities that price might go to the downside. And that is without Elliott waves. It's just basically tracking your statistics of past price action, which is no guarantee of the future, but it can give you an indication of what might happen. Wick on Bybit over here, already wick this low, increasing increasing the probabilities other charts will follow, and Bybit will also fill this wick. And that is just based purely on probabilities of filling wicks to either the up or the downside. Whereas another one, this is not too great. Oh, here's the wick, right? 3-wave move down, and you will find many examples of these type of wicks where eventually you have a 3-wave move and you move towards the downside to fill the wick, or the upside, of course. And it can be up or down. This was one as well over here. I still remember this very well. Here, wick, 3-wave, move down, fills the first wick. Of course, you create a second wick for a bit, but it's about the first drop, right? The first drop, then you get a range, then you fill the wick. That is what it is about. So you can go back in the chart, you can record the statistics about these wicks. It's very interesting. Here you have a wick as well that eventually got filled. This one got partially filled, not completely, but it already moved far to the upside. So it's just a statistical advantage to have that information, and you can use it for trading. Of course, it doesn't give you an entry, right? It doesn't scream to you, okay, I got a short. The entries can come later. However, if you know Bybit has such a big wick and price then starts to move to the upside, you got to also think twice in comparison, or in addition to other tools you use and Elliott waves and all that good stuff. Depending on how price forms to the upside, you might be interested in, hey, I might be looking for a little bit of a short setup because, well, Bybit has that big wick over here, and you never know. Might be a very good choice. And there were definitely some interesting short setups in this range over here. But now, of course, price is moving already to the downside. So if we zoom in, fill the wick, exactly, fill the wick. It's quite rare as well for price to not come down and fill such a wick because it's a big inefficiency on the chart. So yeah, it's and that wick goes to 23.6K. But if I open my target boxes, which already are open, you can see that below the double bottom here, I don't have much left. So 23.6 is over here, but it's for me in the middle of nowhere, really. My next real support area is 21.8 to 22.6. So what's in this support area? We have here a monthly naked point of control, weekly, daily naked point of control, 12-hour order block, some lows. Must be like this little order block lows, I guess. And just a support resistance area. So definitely an area of interest. If that loses, then of course 20.2 to 20.6. So yeah, and having this information in combination with what I'm going to show you now is makes it very interesting to move to those lows. No guarantee, there's no securities or certainties in trading. There's only probabilities in trading. Thanks for pressing all the hearts there. I see you. I see it in the corner of my eye. Look, if this is the low and we're looking for a move to new highs, right? There is a couple of Elliott Wave scenarios you have to know about. Let's go out of log because that's not relevant. So first, let me actually put this on the chart. Bit of education here. So the moment you're gonna the moment you're starting to look for a reversal, right? You have a low or you have a high, and now you want to see price reverse to the other side. What you want to look for are impulsive structures, and there's a couple that will lead to an impulse. So first, you have just a regular impulsive structure. Then on 2, you have the diagonals, and on 3, you have the double 1, 2. Voila. So the question is, without actually putting this one on, do we see this? Well, a normal impulsive structure, 1, 2, 3, 4, 5, no overlap between 1 and 4 allowed. So now you can play with the rules. So you build yourself a little structure, and then you go and follow the rules. Well, clearly there's overlap between the high of a potential 1 and a 4 here. So we can't think about a normal impulse. Then we get 2 diagonals. You have the contracting diagonal and you have the expanding diagonals. By far most common are contracting diagonals. That's a probability advantage that you have with the contracting diagonals. Like any expanding structure in Elliott waves is rare. So the moment you see price over here, you could think, okay, we might look for a potential contracting diagonal. But then price keeps pushing, pushing, pushing. And what it does is that in a contracting diagonal, this is your wave 1, 2, then you want to see a 3, 4, 5. But wave 3 is not allowed to be longer than wave 1 in a contracting diagonal. And it touches the 1-to-1 taken from the low to the high to the low over here, which then invalidates / really makes the probabilities a lot lower. You're looking for a contracting diagonal. Now, if wave 3 would have not hit the 1-to-1, right? So it would have closed, for example, over here. What you can then do as a little trick is, let me actually put this on the chart. If you're looking for a diagonal, then this is 3, you're looking for 4. So 4 is not yet known, right? So basically, we are here, right? You take a channel from the high of 1 to then the high of 3. Now, in this example, wave 3 did not hit the 1-to-1 of wave 1, right? So it's shorter. It's a shorter wave 3. So just for the sake of the example, you then put a channel till the high of 3 to the low of 2. Wave 4 is not allowed to hit the low of the channel because once it does, you don't have a contracting diagonal anymore, because a contracting diagonal will have the trend line, the lower trend line, converging to the upper trend line. And the moment it hits the channel trend line, it's not converging anymore. It's just a channel, but then you have to switch to expanding diagonals. But now you know expanding diagonals are rare. So the moment the lower trend line is hit, we get a bit of a problem. Now, if we then play with price, then whatever eventually happens is we also take the trend line. So besides wave 3 being too long, if I put this on the actual high of wave 3 over here and on the actual low of wave 2, besides wave 3 being longer, you also hit the lower trend line, which really invalidates any contracting diagonal. So then you have the expanding diagonal, which is this one over here that I showed you earlier. But an expanding diagonal is rare. So an expanding diagonal always has lower probabilities, and you first have to really invalidate all other options before you switch to an expanding diagonal. So a normal impulse, a contracting diagonal, and a double 1-2 all have to be very unlikely for an expanding diagonal to be left. In this scenario, in this case, a double 1-2 is also very unlikely. Reason being, that. Let me put in the work here. Pum, 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 pum. Higher degree count in green, lower degree count in blue, most commonly. And before, actually what you just want to see is the second wave 1 in blue and the second wave 2 in blue should be shorter in time, price, compared to the higher degree wave 1 and 2. This one is longer. Can happen. But also this wave 2, if I remove the replay, by the way, this wave 2 is also already longer in time, the second wave 2, than the first wave 2, which is not what you want to see. It really, really lowers the probabilities of a double 1, 2, because this blue count should be a lower degree Elliott wave count, as the blue count is a sub-degree count of the bigger wave 3. So yeah, it's not really what you want to see, which lowers the probabilities of a double 1, 2, and then we're kind of stuck with, you know, low probabilities double 1, 2, and you have the expanding diagonal, which in general has low probabilities as well. So doesn't look too great, right? Dossa Gaming, welcome. How you doing on Sunday? Good to have you here. Christian as well from Switzerland, but moving to Thailand. Hopefully soon, man. Right? I forgot like what month you're actually gonna move to Thailand. But then we have this, the expanding diagonal, right? 1, 2, 3, 4, 5. All the waves, or I should say this differently, wave 2 and 4 should be zigzags or part of the zigzag family, and wave 1, 3, and 5 can be impulses or zigzags. So, but they all have to be the same. So if 1 is a zigzag, then 3 and 5 have to be a zigzag, not allowed to, you know, be different. So in this scenario, wave 2, most common target, golden pocket to the 886 for an expanding diagonal, but it hit the 05, less common for an expanding diagonal. Wave 4 is deep enough for an expanding diagonal. Wave 3 has to be longer than wave 1, that's correct. But then you want to see a fifth to the upside, right? Without invalidating the whole scenario, so without taking this low. So at least taking the 1-to-1 here, sitting at 29.1k, where we also have additional support. Welcome Charbel Hapchi, good to see you around. Randlelwa, good morning. And Ayan Azu, go down. We never know what price does, but we can only play the probabilities based on your plan. But if we talk about probabilities, then on a medium time frame, on the 12-hour, it doesn't look good for the bulls. But there is still a scenario, bearish scenario, where also a move up is still an option, right? This range over here that we have at the moment is very, very important for the scenarios of continuation or a bounce to the upside. And time is one of the important factors here, but I'll go over that in a second. So just in general, these are the 3 steps that you want to take if you're looking for a reversal on any time frame, right? Any time frame. Can I see an impulse? No. Okay. Is there overlap between 1 and 4? You got to think diagonals or double 1-2s. In a double 1-2, of course, each wave 1 has to be an impulse. But yeah, you know, this is like the list that you want to check. So it doesn't look too great. The double 1-2, low probabilities, expanding diagonal in general, low probabilities, which then brings us to the bearish scenarios, which from an Elliott Wave point of view have a higher probability of playing out. And it's all probabilities, right? Like, of course, price can go to new highs. There's always a probability, but it's just currently not looking too great for that to happen based on simply Elliott Wave knowledge. So the bearish scenario is either your ABC that's finished and you're already on your way to the downside, 1, 2, 3, now in a range 4, then a wave 5 next week. Then you get a bounce, corrective structure, 3-wave move before continuation, probably going to be like 1 week later or 2 weeks later. So then you have a 1, 2, and then you get the big 3 where you're going to be looking for lower prices. Another possibility, by the way, is that this is a 1, 2, 3, you get now 4, and you get an extended 5th. And the reason that is an option is because this, being a wave 3, is quite similar in length than wave 1. And if that happens, you have to pay attention to the potential of an extended 5th to the downside. An extended 5th has the target taken from the high of 1. I will show this in more detail in a second. To the low of 3, to the potential high of a 4. And then over here, wave 5, extended target. 1.618 or further, 23.6. and it's literally filling the Bybit wick. But extended fifths are not very common. So yeah, something to take into account. The WXY here, if price moves to the upside once more, it can still be part of a wave Y. The 1.618 fib time is still a valid fib time of wave Y compared to W, sitting at the 24th of October. So yeah, you can still get this and still be bearish. So it's very, very interesting what's happening at the moment. And for the targets to the downside, for the ones interested, if your high of B is already in, then the most common target for your C is between the 1 and the 1.236, 22K to 20.5K. And you also, again, have the additional support areas, right? And that means we would then fill the wick on Bybit, also take the double bottom and make people scared. And what is nice about from a trading psychology perspective is making people scared at the lows and make people hyped at the highs, because what it does, it creates the liquidity for the bigger positions to fill their bags and turn price around. So this was a scenario. I call it a psychology scenario, just an interesting name, where when price was ranging over here, we were talking about the scenario of breaking the trend line, maybe having a bit of a test, move up again, and then move down. It's just a liquidity thinking, because once this trend line gets broken, usually beginning traders that don't have a plan, like the first thing you learn, which I did as well, first thing I learned was trend lines and patterns. Now you can trade trend lines and patterns very successfully, but I guess that many of us, and some that are watching using trend lines and patterns realize that it's, usually there's fake outs. Very often there's fake outs. And this would be a fake out scenario where, you have trend line over here, 3 touches, you break the trend line, you have the breakout traders going long, looking for new highs. But instead, that liquidity is caught and you're going to move to the downside. Or you get more liquidity being caught. So that is what I mean with the bounce. There's even more longs coming in, market longing, everyone hyped, new highs coming, and then you get the dump. Everyone gets scared, stop losses being triggered, stop, boom, 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 and then you get moves like this, right? This type of move is typical for people longing. There's so many people longing here that their stop losses are being hit, and these type of moves is not because people are selling. This type of move exists because all the stop losses are being triggered. And of course, a stop loss on a long order is a market short. So you just fall through like tung. And that's why on the open interest indicator, if you use open interest, during moves like this, you see open interest dumping down because all the positions are getting liquidated. It's the same with moves like this, right? You're ranging to the downside constantly and people shorting, and you see it all the time. So also here, how many people are going short, and then you get these quick spikes. So very often wave 3s are the waves where it's initiated by stop losses being triggered, then people flip around and they buy in later, which gives an extra push to a wave 3. But the wave 3 often starts by triggering the stop losses, which creates the volatility, which then makes people go short or long inside a wave 3, gives the extra push. So it's very, very interesting. So this is definitely something I keep my eye on, where eventually either this or this. Very, very interesting. Okay, let's zoom in. Good morning. Whoopa. Marcus, how you doing, Marcus? Welcome. Good to have you around once more. Damn, the gold badge already. Eh? I actually wonder when you go to the next one. Maybe next month. João Luiz, good morning from a Portuguese in Brazil. Another Brazilian, or at least you're in Brazil now, but I've never been there. Still on the bucket list. Dasa Gaming, I'm expecting a fake pump up to 29K and then go down to the double bottom. Would be nice, bait even more longs there. Ethereum, please, maybe later, but I'm not sure it's going to be on the agenda today. because I don't have too much time. Okay, locally, where is it? This, like this range here, very, very important for either moves to the upside or the downside. So this is the bearish scenario, of course, 1, 2, 3, 4, 5, eventually looking for a move down. By the way, talking about wicks getting filled at the beginning, here a big wick on the 4 hour, price moves up and then slowly goes down, fills the whole wick, right? Another one here, of course, big wick, move up, and then you move down. Always interesting. Let's see. Yeah, so in this scenario, we have the 1, 2, 3, 4, 5. Wave 3 is not the shortest, as the 1-to-1 of wave 1 has been passed. So that is then important. And this is on a wave 4. You look for a wave 5. Now, this is quite a long range. This is actually, by the way, quite a difficult wave 1 to count. I don't really like to count this as an impulse, but you know, in the bearish scenario, you kind of stuck with it. Or you're also, again, looking for like an expanding diagonal structure, but we'll see. The thing with time, though, is that this over here for a wave C starts to be a bit problematic. So if this is your A, B, C, A, B, and then your wave C, then on the lower time frames in a wave C, you want to count an impulsive structure. Meaning that from the high of B, you want to count an impulse in C, which is a 5-wave move. Counting a 5-wave move here is difficult. The initial scenario I had is that you have a 1, 2, 3, 4, 5. But this wave 4 cannot be like, you know, 10 times, 8 times longer than wave 2. It's very, very uncommon. Preferably, it's about 3 times longer. Like 2 times, 3 times, maybe 4, but like it's kind of stretching it if you go to like 7 or 8 times longer, because then this move goes up in a degree. Instead of being part of a sub degree over here, you will then compare this range with this whole range, which means the bearish scenario is this is then a 2 and this is a higher degree 4. So 1, 2, 3, 4, 5 preferably, and that's what I mentioned on Thursday and Friday. Preferably before the weekend hits, you get a 5 to the downside, because the moment you do not get a wave 5 down and finish C, the probabilities become lower. It is a wave C, because this range, you know, price always, usually, not always, can't say that, usually ranges in the weekend, but then the range is going to be so incredibly long compared to your wave 2 here, which kind of messes the right look for a wave C. So that's not nice, right? But we never got another move to the downside. And counting this over here as an impulse in any other way is very, very difficult. 1, 2, 1, 2, 3, 4, 5, 4, 5. That's a very, very long 5 compared to a minimum 1. 1, 2, 1, 2, 3, 4, 5, 4, and then 5. I mean, you can force any count. So basically for a wave C, you preferably want to have this as the low. That's basically what I'm saying, right? So this being the low of a wave C inside the most common target area of a wave C. But if this is the low, you want to see bullish structures. And there you go again. Do we have an impulse? Right? 1, 2, 3, 4, 5. Well, not at the moment for sure. Do we have a contracting diagonal? Well, contracting diagonal is also already invalidated. This potential then second wave 1 is longer than your first wave 1. And also in a contracting diagonal, the corrections have to be zigzag structures. So it has to end over here. So this is then, I don't know, wave 1, 2, 3, 4, 5. But yeah, second wave 3 here is longer than wave 1. It doesn't look good. Diagonals, well, then you have the expanding diagonal still, which we are kind of like getting towards. Let me have a look here. Yeah, even the channel almost hit. So yeah, probabilities also locally for a bullish scenario at the moment are not great. And a double 1, 2, where this is your wave 1, 2, 1, 2, or 1. Let me actually zoom in because I have this scenario, which is this one. So in a double 1, 2, 1 WXY in wave 2, second 1, and then another whatever corrective structure in 2, and then a 3. But preferably, of course, the second wave 1 is not longer than the first, but as you can see, it tagged the 1-to-1. Okay, you know, might happen, but the time of wave 2 for me is even more important. This wave 2 took this long, and the 1-to-1 is a reflection of the time it took for this wave 2. So this 1-to-1 vertical line is taken from the high to the low, from the high of 1 to the end, or I should say differently, from the start of 1 to the end of 2, to then on top of this one, which is the end of your second wave 1. To compare this 2 with this 2. The moment you hit the white line, probabilities again really decrease. That this is a double 1-2, increases probabilities. All of this is corrective. Increasing probabilities, there's still going to be a move to the downside, which decreases probabilities. We have an ABC going on, which increases probabilities. You might have an impulsive scenario. So you see, like, everything is in relation to each other with the different time frames. And also you don't want this low to be broken if you're a bull, because that was the beginning of this move up. So if this is a second one, you don't want to see this one broken. So yeah, not great at the moment. But we continue to observe, because there's always probabilities for a move up. But will it be an impulse, or will it just be move up and down again, right? Because we do have over here that naked point of control, which is important, 27K, which is interesting level for sure. But at the moment, it's difficult to count really impulsive structures here. 1, 2, 1, 2, continuation. That is the kind of scenario that for the bulls I'd be looking for. 1, 2, 1, 2. Yeah, because an expanding diagonal also. Wave 3 is a little bit. It did take the 1-to-1 of wave 1 for an expanding diagonal, but wave 4 expanding diagonal, golden pocket. Yeah. So you also have the expanding diagonal structure over here. So double 1-2 or an expanding diagonal, which is less common in general, or we think corrective. What is important for the bulls is also to take this key level. If you take this low, probabilities decrease. We're in an impulse to the downside. So yeah, this range is very interesting, and it's also quite difficult from an Elliott Wave point of view to really count this in a lot of detail. So time is very important. Of course, I love using the CVD divergences, as you know from the content. And holy moly, it's warm, by the way. Holy moly, I can't. I tried, like, not, too warm. The sun is shining, I was not prepared. So, of course, I keep an eye on all the divergences. We have bullish divergences as well as bearish. So even here, we have it's mixed. It's very mixed. So I kind of would like to see a breakout of this range. Until that moment, be very patient. Keep an eye on the levels. Naked point of control, the daily here, and just below the point of control, which is this one. And just be patient. It's Sunday, it's weekend, we can do time, spend some time with family, spend some time with friends, touch the grass, as we say in the gaming industry all the time. And be patient here, because the breakout of this range is important. It's just that time-wise, it starts to take very long for bullish scenarios. So the bearish scenario locally, yeah. A, B, C, D, E. Yeah, mine. I don't know. Maybe it's I'm never a big fan of triangles. Volume over here in the middle. went up. In a triangle, you want to see volume going down consistently. So, yeah, very, very difficult range to count. Of course, the news event doesn't necessarily help. Could have an A, B, C, and W, X working on a Y, but if this is your Y, it's very, very rangy. The 0.618 in confluence with that naked point of control at 27K, which is interesting. But yeah. I think for the bulls, preferably you don't get below these lows here because of time. So because time is running out. This 1-to-1, you don't want the correction to end. Like if this is your 1 and 2 and then 3, you better have wave 2 already in, basically. So either 1, 2, 1, 2, 1, I don't know, like it doesn't look nice. Of course, it would be funny for price to just pump, but that's the thing. In a range like this, it's just very good to be neutral. Yes, we have probabilities on the higher time frames. We have probabilities, but if we only look at this range over here, then it's very difficult to count bullish structures, which means probabilities are higher. This is a corrective structure, which means probabilities are higher to take the double bottom. It's a probabilities game in the end, and it's simple from that perspective. That currently doesn't look like an impulse, doesn't look like it, or impulse is invalidated, contracting diagonal is invalidated, expanding diagonal is rare, double 1, 2, wave 1 over here is longer, wave 2, if we get even more lows, it's going to be longer in time as well. So that is like very low probability. If that happens, looks corrective, no? Looks corrective. Uppa. Charbel Hapchi, you're the best. Thanks, Charbel. I appreciate it. Jay, hidden bullish RSI divergence on the daily. Who knows? Might be interesting. Have a bit of a move up to 29K and then dump from there. Like I am very neutral, and I think that's also a great position to be in. I trade Bitcoin because it's an asset. You can just trade it up or down, short and long. I don't care what price it is. I care about the volatility because I can trade the price change. But I really don't care if it goes to 32 or 20K. We just want to trade the highest probability setups based on our plan, strategy, entry requirements. This is, by the way, this is something with blah, blah, blah vinegar. I don't know. My fiance is like one of those healthy types, No, we just, I love healthy. We eat healthy, drink healthy, all that good stuff. We do lots of sports. But sometimes she also makes these like vinegar type of drinks, which apparently is good and cleansing and, that type of stuff. Sun Angel, good morning. Tuning later today, didn't get the notification. Yeah, I don't know. Maybe some people got a notification, maybe other people didn't. Not sure. But good to have you around, and nice that you found it as well, right? Nice that you found it. Welcome on this amazing Sunday indeed. Christian, still need to sell your house here. I see. And then, of course, need to buy one in Thailand as well. Mark Dutch, what's up, man? ABC or 1, 2, 3? Koenz analysis is always starting to rhyme now. Nice. Sir, kindly explain double 1, 2 and triple 1, 2 scenarios. Okay, there we go. Heineken is healthy. Yeah. Oh, yes, here Ali removed his message, so maybe not. Always in for some education. So yeah, those are basically the probabilities from the medium time frame to locally, right? So yeah, there's not too much to say besides being patient. What is interesting, of course, is the bearish CVDs. Lower high, higher high, higher high, higher high on yellow. Nothing on blue. Actually, blue was bullish here. Higher low, lower low. But, yeah. Bullish divergence didn't yet play out. The bearish divergence didn't yet play out. So it's like it's a mix. But the bearish divergences at the moment over here. Oh, and this is the bullish one. Price moves up, creates more bearish CVD divergences. So. Oh, that's the wrong. That one. Sir, kindly explain double and triple 1-2 scenarios with volumes. So you wanted to add the volume part. Okay. Double and triple 1-2 is kind of like the same, so I'll just go over the triple one. Up, and lift off. And then we have 1, 2, 3, 4, 5. Then we have 1, 2, 3, 4, 5. And guess what? 1, 2, 3, 4, 5. That's a good question, DP, which I'll answer in a second. So let me first go through the chart or the scenario. So double and triple 1-2s, like usually when you get a double 1-2, the triple, kind of automatically comes as well, because what it is a double or triple 1-2 is nothing more or less than a buildup of lower degree Elliott wave counts before you get a very, very big wave 3. So if you see this type of stuff, you can expect a big pump, right? And this is eventually going to be part of your 3. And by the way, what is interesting here is that you then have first the wide 3, then the wide 4, then the white 5, which finishes the blue 3. Then you get a blue 4. Then you get the blue 5. Finishing the green 3, green 4, green 5. You get the idea. So what is quite common is that at the end, you're going to form a range. What the hell? Up. So you get a range at the end. This is quite common because at the beginning you have a buildup of 1, 2, 1, 2, 1, 2, but you're going to end with 4, 5, 4, 5, 4, 5, and then you get the corrective structure. Right? Okay, so in a triple 1-2 or double 1-2 for that matter, wave 1, right, has to be an impulsive structure, meaning this wave 1 has to be a solid 5-wave move, or it has to be by itself a diagonal. You don't really see diagonals inside diagonals often, but it is possible nonetheless. So you then have over here wave 1, and the second wave, so the highest degree count is green, lower degree count is blue, and the lowest degree count is white. Most commonly, the second wave 1 takes the high of the first wave 1, by far most commonly. The third wave 1 takes the high of the second wave 1. Now, of course, the lows of the 2s are not allowed to be taken with the next low, like this is not possible, right? Also, these wave 2s do not have to be zigzags. So in a traditional diagonal, where it's a leading diagonal, 1, 2, 3, 4, 5, wave 2 and 4 have to be zigzags. But in a triple or double 1-2, these wave 2s can be anything else as well, except a triangle. So it can be a flat, for example, as well, in this being a wave 2. Now, usually the corrective structure you see in the first wave 2 copies into the second and the third wave 2, but of course that's not a must. It's just something that you have to think about. And the volume pattern in a traditional, so in a contracting diagonal, 1, 2, 3, 4, 5, actually a little bit nicer. drawing skill. So if you have a normal 1, 2, 3, 4, 5, in a normal diagonal, you want to see the volume moving down slowly, right? And then you get your 2, and then you get continuation. In a double or triple 1, 2, the volumes don't necessarily have to match. So the volumes don't have to go to the downside. You can get the spikes here as well. So you can have your wave 1 volume, which moves up, your wave 2 volume, which moves down, and then you have your second wave 1 volume, which could give a bit of a spike, you know, and then so it doesn't have to be as like, oh, it has to go down. Most commonly though, because your second wave 1 and third wave 1 are shorter, they tend to have a little less volume. It's just not a requirement. For a leading diagonal, 1, 2, 3, 4, 5, it is a requirement, right? But for a triple 1, 2, volume in the highest volume candle in the second wave 1 can be higher than the highest volume candle in the first wave 1. So then you have a mismatch with a leading diagonal, 1, 2, 3, 4, 5, because the second move up has a higher volume peak than the first one, which is not what you want to see, but in a triple 1, 2, it doesn't matter. So, this is basically the triple 1, 2. You don't like, and what I like to see with triple 1, 2s personally is I like to see bullish CVD divergences build up as well. So you have a higher low in price, right? And then you have a lower low on the CVD. Sometimes you might not get it between these lows, but then I want to see it between these two, higher low in price, lower low CVD, and here, higher low in price, lower low in CVD. So, and then eventually you get the big wave 3 to the upside, which should be a big push, and then you start like with the 4, 5 build up. So 4, 5, 4, 5, 4, 5, which tends to be a ranging structure. What's up, Chaz? There he is as well. He back. He went from the comment section in the live chat now as well. So I hope, Yasir Ali, that this will help you in your trading, in spotting at least, double or triple 1, 2s. Getting into a position when this is building is incredible, like because you have the big push coming. Build-up of bullish CVD divergences can give a good indication of potentially a double 1, 2. But this is also what I often say, is that if you have a 1, 2 and then a 1, 2, this is not preferred. Low probabilities, it's a double 1, 2 if your second wave 1 does not take the high of the first wave 1. So then it can still be a 1, 2, and then you can have a 1, 2, 3, 4, 5, 4, 5. Yes, it can still be an impulse where this is your 1, 2, 3, 4, but it's not a buildup of like 1, 2, 1, 2, 1, 2. So you expect a smaller push and a quicker retracement down eventually once it's finished. But yeah, very interesting. Hey Koen, what's your position size usually? Do you use leverage? Do you use tight stop losses, or do you let the trade run for God knows how long? I love the question. Well, first of all, I never go into my position size or my portfolio or investments or all that stuff because it doesn't matter. Everyone has their own story. Everyone has their own way of trading, their own way of grabbing withdrawals of the profits or building their portfolio to I don't know how much. What is a lot for someone might not be a lot for someone else. Someone can live on a couple of $100 depending on the country, or maybe thousands, or someone maybe has a portfolio of $1 million. So I never really talk about my portfolio size, as it's not important to know what I trade with. What is most important is how do you trade? And there's many different ways and strategies to trade, but you need to find a way that is best for you, because in the end, trading is very personal. a strategy that you have to build should be built based on your personal environment, your personal finance, your risk management, your risk appetite, your personality, the tools that you love using, all that stuff. And basically what I always say is my strategy is a reflection of me. The way I trade is a reflection of my personality. And in the end, it's just trying to take the same setups on a different day. So same shit, different day. Of course, the chart isn't 100% the same, but if you have a solid strategy with rules, it's just repeating the strategy day in, day out. And then at the end of 100 trades, hopefully you'll end up with profit, right? And your account will grow. So you can start with 1K, 5K, 10K, but in general, you do need, if you want to live from trading, you can't do that with $1,000 to your name unless you live in a country where the currency is incredibly weak. And obviously not dollars. So in general, you want a big portfolio size so that small percentages can give you nice returns. Do I use leverage? Only if my stop loss is less than 1%. So I trade very safe. I'm not a 10x Andy or 25x or 100x Andy. So for example, if there is a setup, that is according to my strategy, and I enter my short, if my stop loss is exactly at 1%, then my entry, my sizing is exactly my full portfolio. So with my trading, I always risk 1% most of the time. So 1% risk means if the stop loss is 1%, my full portfolio goes in the trade, but I lose 1% if my stop loss is hit. But that means that if my stop loss is going to be at 0.5% at another setup, that now I can trade with 2x leverage. Because if I only trade with 1x leverage, then I will risk a half a percent of my portfolio instead of 1%. So I need to use 2x leverage to now risk 1%. But as you can see, I base my leverage on my stop loss, which also means that if my stop loss is, for example, 2%, right? I just trade 1x and I enter the trade with half my portfolio size so that I am still trading with a 1% portfolio risk. I recommend anyone, no financial advice, but hey, recommendation, to calculate your position size based on your stop loss percentage and the risk you want to lose, not what you want to win. It's not about winning, it's about managing your losses. Cut your losses, cut your losses. If you cannot cut your losses, you will get the mother of all losses eventually. Like you go in deep drawdown. It's about managing your loss. And if you're good in managing losses, the wins will follow. If your strategy is profitable with a good win rate and a good risk to reward ratio and that sort of stuff, the wins will follow. You don't know if you enter a trade over here, if it's going to be a winner or a loser. But based on your strategy that you've developed, based on statistics and tools, you know that over 100 trades, you're going to be profitable. And that's what matters. So I calculate my position size based on my stop loss. And it's always 1%. So stop loss at 1% means my whole portfolio goes in. Stop loss below 1% means I need 2x leverage. And stop loss higher than 1% means just 1x is enough. And yeah, if the stop loss is below 0.5%, I need to go to 3x. But I will still risk only 1%. And that is what it's about. I risk 1%. So the leverage is used to calculate the risk. It's all about risk management. So in trading, I've been there in the past as well. You put this little thing on your screen here, right? You put this this tool on, and you're like, oh, I'm gonna have this is the shit that you see at all those moon boys. They're like, oh yeah, I'm gonna have a 0.1% stop loss SMC rubbish, and then bam, I'm gonna be like 1 to 50x And yeah, I can get a nice screenshot, and I'm gonna post that screenshot in the group, and I'm gonna get lots of likes, and people are gonna be so like, whoa, shit, man, good job, dude. But they will not know that I lost like 50 trades in order to get this screenshot, and my position size is 2 cents. But it's all about the picture. It's all about yeah, bullshit. So you know, trade safe. It's not about the it's not about your profit, it's about managing your risk. Any strategy can work. Any strategy can work as long as you have a plan, if you have statistics, if you have clear targets, stop loss calculations, you know, you can make it work. Like you can trade trend lines, you can trade order flow, you can make it easy, difficult. People can trade SMC, people can trade whatever volume, candlestick patterns, risk, support and resistance levels. It doesn't matter. Like you can be profitable using any strategy, but it's about the fundamentals of trading that are more important. So yeah, it's a great question. And by the way, was there more? Do you use tight stop losses? So that depends on my setup, because I have the same setup whenever they appear, but sometimes the stop loss will be shorter or longer. So even though the setup is the same, the stop loss can vary. And I do not let the trade run. I trade 1 to 3s because based on my statistics, it is the most profitable target versus win rate. And win rate has to do with my trading psychology. Yeah, 1 to 3 is my goal. Never heard about the third 1-2. Yeah, the triple 1-2. Especially once you get leading diagonals, you have to be wary of a triple 1-2 as well. Thijs, Koen, do you know total 3? Yes, actually I do, because Pistachio Will 88 in Discord, and also a member asked me to have a look at this, I think. I like it to see the overall structure. It has a clean count, which indicates we're currently in a bigger wave 4. Total 3. So I only, like myself, I only count Bitcoin, and I've never had to count anything else really. Oh. Because in the end, of course, the charts they will align. So I know I've always stuck at Bitcoin. I've never really counted like other charts as much as I do Bitcoin, because I trade Bitcoin, so I kind of only count Bitcoin. But I have looked at this here. So we have the and use it has a clean count, which indicates we're currently in a bigger wave 4. Ah, I see. So you then count this as a 1, 2, 3, 4, 5, right? That's the way to count. But we do have overlap, so you got to think about diagonals now. Right, has to be a diagonal. You can't be an impulse anymore if you're looking for this. If we look for a diagonal from the low to the high, up, wave 4 contracting. Make sure to put your stuff on logarithmic, and you would still expect downside, because the most common target for a diagonal is the 302 to the 05. Golden pocket is a little less common. This is rare. 786, 886, 236 is rare. So in this scenario, you would still expect price to move down. What is also important here, though, is that over here you see a gap on the monthly. And just like on Bitcoin as well, let me actually remove this. just like with Bitcoin in general, right? With these gaps, these like inefficiencies, you test the gap for the first time. You tick the high over here, you hit it, you get a bit of a move, but then the moment you start closing candles inside the gap, probabilities are very high. You're going to fill the gap, meaning at least 236 billion. But what is then more interesting as well is this order block over here, which is around 142, which of course is still quite a drop. But at least filling the gap. That's 25%. And there's also a support resistance area, which I think I have over here. Yeah, well, so it's actually my confluence folder. So support resistance, because your problem is with a wave 4, it can be a wave 4, but you're going to be looking at a diagonal. Which means the fibs of a diagonal, you would still expect more downside, even in a diagonal. What you can also count this as is from the low here, just count it from this low in a 1-2. So, yeah. But then you kind of skip out on this. But yeah, 1, 2, 3, 4, 5 potential, but there's overlap. So we got to think diagonals or double 1-2s. If we take a fib from the high to low to the high, then it did take the 1-to-1, which actually means a contracting diagonal is already invalidated. That's very nice. And also in a double 1-2, if this is your second wave 1 compared to, don't we have more history? Because if this is your, look how short this is. Doesn't make any sense. So if this is a double 1-2, it doesn't make sense. This second wave 1 is much longer in time and even longer in price. Or well, price, I mean size, I suppose. We're in billions here. Contracting diagonal doesn't look good. Second wave over here, wave 3, and then a 1, 2, 3, 4, 5 is longer than wave 1. Yeah. So I with these type of charts, I often look for the low of the chart. Not like this. Yes, we got to move up, but there's so little history here that for me it doesn't make sense to count this, because I don't know where does it come from on this chart. Did it start here? Did we do this? I don't know. I only know this is the low, but this is such a minor move, and then you get a corrective structure. I often start counting here, and then I just count this move up. And then it could be a 1-2, and then continuation of 3, which then reflects in a scenario like this. Where then the 05, Golden Pocket 786 are interesting levels. So, yeah. There we go. We have to wait a little bit. What are you using to draw on the charts? Do you have a drawing board or just the mouse? My mouse. I've never had... Smilal, I love your question. I actually never had that question yet. I just use my mouse. Yeah, which is... There you go. Acer Predator. It's the white gold mouse that you got when you bought the limited edition Predator laptop. What was the one that I had? The white one? Damn. No, it wasn't a Triton. So in the past, I was a professional gamer and I was sponsored by Acer. And after I was done playing, I remained an ambassador of Acer. At a given moment, I had 3 laptops. So on the right here, I have a Predator 15. Then over here, I have the Predator Triton 500. And then I had another Predator laptop, which was the limited edition white gold one, which I forgot. It was the 300. That is true. Yeah, the Helios 300. Yeah, so I had this one as well. So I had 3 laptops, but this one broke, so I brought it back, and then I kept the other 2. So I'm not an ambassador anymore, but I still have all of their stuff. So yeah. So yeah, I use the mouse, and yeah, that's what I use for drawing on the chart. I don't use a pen. Some people might want to use a pen, you know, on like they have like this tablet type of thing. Usually Photoshop people have like pens that they use in Photoshop. A friend of mine has that because he does a lot of photography. So yeah, but yeah, I just use my mouse. Lovely question. Hasta la vista, Barbie. What's up, Barbie? How you doing? Happy Sunday. Happy Sunday to you. Hopefully everyone has a nice relaxing day. Yeah. I know when I was talking about the position sizing, that's your problem. Yeah. A true Deegan. Yeah, it's you know, it's very difficult to get the habit out of wanting to be part of price, but your setup hasn't shown yet. So you need a lot of patience for price to come to you, and then you react on what price shows you. Yasir Ali, can you explain the degrees according to time frame? Means which degree works on a daily and 4 hour? It's an interesting question, but it's actually irrelevant to counting Elliott waves. So of course you have over here, if you go to the Elliott wave settings, you have degree, right? From minuscule to super millennium. The thing is that, and this is an opinion, of course, I don't care about those, about using these degrees. I use colors, which is for me works much better. So you can have super millennium, blah, 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 super cycle, minor. There's so many options, right? So yeah, you could go through the time frames of, okay, minuscule is like 1 min, and sub micro is maybe 5, and then micro 15, sub minuit is 30. But in the end, it doesn't matter. What matters the most is that you know the count. So I over here, for example, my 1 hour just labeled, I can also label it green. My 1 hour is green, my 4 hour is yellow, my 15 is blue. Yeah, my daily here is red, my minuscule is white. But I sometimes even, I use them, you know, yeah. I use these on all time frames. So even on the weekly, if I get my macro scenario on here, you know, here. So oh wait, go to the weekly. So I'm on a weekly chart. I have the red count and the yellow count. I don't go into, oh, I need the exact right degree, because it doesn't matter. What matters most is that you know your count. And if you organize your object tree, then in a good way, then I use the same colors, like on the macro, right? You can see the yellow and red. But on the high time frame, you can see over here, I have green. This is the daily. So let me go to the daily here. So high time frame, I use green. But if I then go to my, the sun is shining on my screen, so give me a break here. So if I then go, no, not that one, here, and we zoom to the, because this is 12-hour stuff, I also use green. And then over here, you start to see some blue. And here you see also blue. I don't use the Elliott wave degrees in the numbering, because it's more about what do you understand your count, and or if you organize them in folders, it doesn't matter. So the object tree is most important, and you see me use the object tree constantly in the videos as well. And then you go to the micro ABC. Look, you know, it's blue. Impulse, this is micro. Micro is also green. Same as on the daily. So on the daily, I use green, but also micro here, I use green, because it's just a different time frame. But for me, the colors are just more about that I know what I'm looking for. It's not about the degree for me. So to be very honest, I don't know what time frame exactly all the degrees are in Elliott waves, but it's not important. What is most important is that you know, that you know your count based on colors, and so I prefer to use colors than the right look of the number, because of course all of these settings will get you a different look. But you know, who really cares as long as you understand? But it's a good question. It's a good question. Very good question. Sofals, welcome, man. I was wondering if you like to scale it into trades or you respect your initial entry. I respect my initial entry. I always market enter, and I don't scale into trades. I like to scale in, to be honest, especially if Elliott Wave targets are close to each other. Yeah, this depends on your way of trading as well. So Elliott Waves for me is a directional bias, but it's not my trading strategy. I do use pieces and bits of Elliott Waves in my trading strategy, but I don't trade Elliott Waves itself. I have a whole separate entry requirements trading strategy. Like I have 9 boxes to tick, and which just works better for me, because Elliott Waves trading wise, you sometimes indeed you have like the target areas, very long invalidations, and sometimes risk rewards cannot be great, or it's a bit vague. Like this is a area of interest, but I want to be more specific. Like if you have quite a big area of interest, I want to look for an entry in that area. So I look for additional stuff. So I have a whole, so I have, for an A setup, I have 9 boxes. For an A plus setup, I have 3 more, and I'm going to make an A minus now as well. So yeah, it's just, I need more structure, more, I suppose, more rules which carry less interpretation, and it's more precise. That's what I like. By bigger wave 4, I meant the price section we're currently in. It indicates we can expect price to move. Oh, okay, I see. Oh, sorry, Thijs. Yeah, then, okay, I know what you mean now. It's from the high to the downside. You're talking about a potential wave 4 there, which would be very, very bearish, of course. If that's a wave 4, you expect an ABC. Sure. Would be something, eh? Mark Dutch, almost, I mean, it would be something, because then we can expect new lows all across. Mark Dutch, almost forgot to hit the like button. How's that possible, man? It seems we're going down already. Yeah, at least locally. So, see if we can reach that daily, if it does anything. You changed my life with that object tree. Yeah, I think, thanks, Mr. B, I suppose, but I think it's quite a, how do you say it? Underestimated or underused thing of trading to organize the charts in a very structured manner. Man, if there was no object tree, my charts would be an absolute mess. But then again, I like structure. You know, of course, there's people making videos where they have like 5 different Elliott Wave counts on the chart. So all the different time frames are on the chart. But for me, it feels very, very messy. So that's why I have all the different folders, which helps me to exactly look where I want to look. But also for viewers, of course, I do it for myself, but I can imagine it helps viewers to know where I focus, what part of the chart I am focusing on, and what particular count I focus on. The moment I switch between scenarios, they get a better idea of what I'm actually looking at, which hopefully helps them understanding the content. And therefore also understanding what the probabilities eventually mean at the end. So, Okay. So price is dropping. We're not surprised. The daily at the 26,750 could be interesting support. See if it does anything. Point of control is right below, right? So that's one to look for. 26,700. Naked point of control at the high. These are the levels of interest, guys. I've been online for an hour and 16 minutes, and girls. I really have to continue working on my other business with the planning of Q4. So, you know, stuff to do. So, I want to wish you a great day. M1304, he is here as well. My lad, how you doing? I hope you do well. And yeah, guys, I hope this little live stream has helped you in one way or another, that it was valuable to you guys as well. Bit Phantom, latecomer, just at the moment I'm going again, but of course you have a 1 hour live stream to enjoy, I suppose, in case you have nothing to do on this nice Sunday. The weather here changed from raining to sun, so actually I'm happy about that. But yeah, I gotta go, got some stuff to do. So thanks everyone for hanging out. Thanks for spending your time on Sunday to hang out here on the live stream. And I hope you have a great remainder of the day. And the next update will be tonight, which will be again a macro and high time frame update at 7 p.m. Central European time. So a macro high time frame update on the weekly and the daily time frame. So, okay. That being said, have a good Sunday. And yeah, enjoy the rest of your day. Tonight, 7 p.m. new update. Bye-bye.